So, hello everyone. A very warm welcome to all of you in our today's live session, in which we are going to discuss the Basel norms. Now, Basel norms is a topic that is a evergreen topic. Okay. Let it be the RBI examination, RBI grade A, grade B, or any other kind of examination, any other regulatory body examination, or banking level examination. Okay. As I said earlier, it is a evergreen topic. You can see a few questions of Basel norms anytime in any examination. These norms always being in current affairs, because these are the, you can say, the national level, these are the international level regulations, and all the central banks of the world, all the members of these norms try to implement these regulations on their banking sector to prevent them from any kind of, you can say, the any kind of crisis that happened in past. So now let's begin with the discussion, that is Basel norms. We will see what this norms is all about, why there was a requirement of these norms, why this name Basel, from where this name Basel came in existence, then what are the different norms they have released till now. So we will see everything, starting from the origin of this committee, of these norms. What was the reason? What were the different, you can say, what were the different reasons behind these norms, and each and everything that is important from your examination point of view, or even from your over general knowledge point of view. We will see everything in this particular discussion. So just wait for a minute. Let me share my screen to you people, and then we will go ahead. Just wait for a minute. Okay, chalo. I think the screen must be visible to you people now. And now let's begin with our discussion of the day, that is Basel norms. What are Basel norms? This is what we will be discussing today. As I told you, this is not only important from a point of view of any other, this is not only important from a point of view of any specific examination. Let it be the RBI examination or any banking level examination, it is quite important. Okay? Now, so first of all, what is Basel norms? What is Basel Accords as well? Some people say Basel Accords, some people call it Basel norms. So it is an international banking regulations. So it is a banking regulation only. We know that RBI in our country, our central bank is Reserve Bank of India, and Reserve Bank of India releases all kind of regulation to regulate the banking sector of our country. But if you ask me on an international level, then Basel norms is something that is there on an international level to regulate the banking sector. So these are the international banking regulations issued by Basel Committee on Banking Supervision. So this name Basel norms came from the name of the committee only. Okay? That this committee on banking supervision releases the international banking regulations for its member central banks and other stakeholders. The aim is to harmonize banking regulation globally to strengthen the international financial system. So basically, whenever we talk about the RBI regulations, we are specifically talking about India's banking sector. But when we talk about the Basel norms, then it is there for the international financial system. So there should be a harmony in international financial system, because nowadays, if you see, the interdependency of different financial system of this world is extreme. A negative happening, a negative incident happening in a single financial system of any other major economy can have a domino kind of effect on others economies as well. That is the reason that harmonization in the banking regulations globally is extremely important, and for that purpose we have this Basel Committee on Banking Supervision, who releases the international banking regulation to regulate the international banking market. Now, it represents a set of agreements focusing on risks to banks and overall financial stability. We will see what are these set of agreements. We will see that. Now, why the name Basel? You must have seen people saying, okay, Basel norms are important. These are the things are important. But from where this name came, Basel. So Basel is a city in Switzerland. First of all, it's a city in Switzerland. Now it's a home to Bank for International Settlement. So it is an extremely important topic that if anyone asks that what is the, even in any examination, if they frame questions that what is the headquarter of Bank for International Settlement, then their headquarters is in Basel, Switzerland. And because of that only, as the Basel Committee on Banking Supervision is located in the headquarters of the Bank of International Settlement, that is in Basel, Switzerland, this name came. So that committee who formulate this international banking regulation is located in the headquarters of Bank for International Settlement, that is there in Basel, Switzerland. And that is the reason this name Basel norms or Basel Accord came in existence. Now, it is a home. So it got founded in 1930. This Bank for International Settlement got founded in 1930. It promote cooperation among central banks for global financial stability. Why they're talking about this global financial stability? Because in the financial crisis of 2007 and 8, when you see when that crisis happened, there was a domino effect. At that time, the US market collapsed. That USA financial market collapsed, but it had a domino effect. It had a rampant effect on each and every major economy, because in a present time the interdependency of global financial system is extreme. Now, what is this Basel Committee on Banking Supervision? So it is a global standard setter for prudential regulation of banks. It got established in 1974. So just wait for a minute. So the Bank for International Settlement got established on in 1930. Then this Basel Committee got established in the year 1974. So these are the few timelines you must be remembering. Okay? It got established in 1974 by the central bank governors of G10 countries. That time G10 countries was there. So their central bank governors came together and then they established Basel Committee on Banking Supervision. Then membership expanded in 2009 and 2014. Now 45 members are there, including the central banks of different countries and regulatory authorities. Now it acts as a forum for international cooperation on banking supervision. Now, if I ask any one of you that what are those, you can say the platform for all the countries to cooperate on a national level or on an international level in terms of economics, then you can say that there is the IMF, there is a World Bank. If you say on a general perspective, then we have the United Nations, etc. But if we talk about that, what is that international forum that provide international cooperation on banking supervision or in domain of banking, then it is what? This is the Bank of International Settlement 1930, and then this committee as well. This committee on banking supervision is also one of the part of this bank that provide the a forum, a platform for international cooperation on banking supervision. Then we have objective. The objective was, as of now, whatever we have discussed, we have a very clear cut idea that what could be the objective is. The objective was to strengthen understanding of supervisory issues and enhance global quality of banking supervision. Then, why Basel norms? What was the requirement of these norms? Because whenever RBI releases any kind of, you can say, any kind of regulation or guidelines, there's a reason behind it. So that what was the reason behind this most famous or extremely important Basel norms? So banks lend to various borrowers. Each has its own risk of defaults. We know that. Now, lending involves public deposits, funds from equity and debt. Now, these kind of exposures that banks have in terms of credit to different borrowers, then public deposit, then investment in equity and debt, these kind of various exposures makes banks vulnerable to failures. This is what happened in the year 2007 and 2008 crisis. ठीक है? Then, hence, bank must keep aside minimum percentages of capital as a safeguard. To address this risk, Basel Committee introduced Basel norms. Till now, there are three Basel norms have been released collectively. Okay, and we call it Basel Accords. Now, the basic fundamental in all the Basel norms, all the you can say the norms that came, Basel norms 1, 2, and 3. The basic fundamental you will realize over there that they focuses on adequacy of capital. What is the capital? So capital is a amount of money, you can say, that is there in a more liquid form with you. You keep those percentages of your total capital requirement aside. There's some minimum percentages for that as well, as per these norms, and you keep those capital aside just in case any kind of financial crisis or liquidity crunch or any issues happens. So just to absorb that shock, we should be having some kind of, you can say, some kind of capital with us. So this is the same kind of concept that in our daily lives we keep some amount of deposit with us, we keep some amount of cash in our homes, so that in case of emergencies, to absorb that shock of emergency, I'm sorry, to shock that kind of financial emergency or any kind of emergency that may occur in our home, we should be having some amount of funds with us. So on the same note, this Basel norms talk about the minimum percentages of capital that is required to be there with any banking entity to absorb any kind of financial crisis or any kind of liquidity crunch or any kind of issues that may happen in future. So as of now, we saw that three Basel norms has got released till now. Okay? Now let's see the first Basel norm 1. So Basel 1 released in the year 1988. First Basel Accord, it was the first Basel norm introduced in 1988. Now it focused mainly on credit risk of borrower's default. So you may say that credit risk is one of the risks that is extremely prominent in banking sector. If you see other kind of risks, so we have liquidity risk, we have market risk, we have interest rate risk, multiple risks are there, operational risk, systemic risk, but credit risk is something that is one of the most important risks that is there in the banking sector. Now, what this risk is all about? So, credit risk talks about the defaults from borrowers. For example, I am here, I am a bank, I have given loan to someone. Now, that person is not able to repay my loan. Now that borrower has defaulted. Whatever amount I have credited, now it is at risk. So we call it credit risk. So whatever credit you provide to your borrowers, there is a chances of defaults of the borrowers, and then your credit will become a non-performing asset. So we call it credit risk. So the Basel 1 basically focused on credit risk. Now it defined capital structure and risk weightages for banks. Now what is this risk weightages? So whatever assets a banking entity may have. Now basically if you see, most of the times these assets are the loans and credit that these banks provide. Okay? So whatever assets these banking entities have, you need to assign some kind of risk with them. For an example, if I'm giving a collateral free loan, then there is a high chances of default. If I'm giving to some kind of early stage startup, then there is a high chances that that startup will not work in future. So my credit is at risk. So which every each and every exposure any banking entity is having, we associate some kind of risk, and then we sum it up, so that what is the risk weighted asset in our banking facility. So as per that, we have a risk weightages for different exposure and an overall risk weight for banks, and then we set a minimum capital requirement to deal with all risk weighted asset. Okay, for example, if we have exposure of 100 rupees, then we will see that we have invested this 100 rupees, we might be investing, we might have given loan to any corporate sector, to any MSME, to any individual borrower, to any housing finance. So if you see, then we associate risk with a different asset, risk with the different assets, and then we'll sum it up, then we will sum it up, and then we came across a minimum capital requirement percentages of those risk weighted asset. So the minimum capital requirement this Basel 1 said was 8%. That whatever amount of risk weighted asset you are having, you must be having 8% of that risk weighted asset with you in a form of liquid capital to absorb. Now this is a minimum requirement, maximum you can keep any amount. Okay? So this much capital requirement was there to absorb any kind of risk associating or originating from this risk weighted assets. Okay? Now India adopted these norms in the year 1999. Moving ahead, we have the Basel norms 2. Now, what is Basel norms 2? As of now, we saw that what is Basel norms 1, and now we will see the Basel norms 2. So it came in the year 2004. Okay? Published by the Basel Committee on Banking Supervision in the year 2004. Now, it was a refined version of Basel 1. It was based on three pillars. What are these three pillars? These three pillars was capital adequacy, supervisory review, and market discipline. So these were the three basic pillars of this particular Basel norm 2. So this is a very fundamental question. Any examination can ask you that what were the three pillars of the Basel norms 2. So these three pillars was capital adequacy. It means you must be having a minimum amount of capital with you to absorb any kind of risk originating from a risk weighted assets. Supervisory review, it means banks must be having a risk management structure with them to see or to forecast or to predict any kind of credit market and operational risk that may arise from their organization, that may arise in their organization, as well as that may can occur in the entire banking system. So there should be a risk management structure in all of the banking systems to predict, to mitigate the impact of any future credit market and operational risk. Then we have the market discipline. Now market discipline is basically about having a transparent and accountable disclosures of the data. So whatever data, now you must have heard about the window shopping and the greenwashing. So all these kind of stuffs are there. Just any banking entity or any other organization as well, just to provide a better view of their balance sheet, of their P&L account, they can do these kind of window dressing. Okay? But market discipline talks about that there should be a mandatory disclosures of few datas that is extremely important, not only for the banking entity but also for the other stakeholders. Okay? In a banking entity, it's not only a banking entity that is going to be in a loss if they defaults, or if there will be any crisis. The whole society, there are other stakeholders, including the government, including the public, including the society around them, is going to suffer if anything happens to any banking entity or any banking sector. So market discipline is extremely important. It's talk about disclosing various data of this banking entity to the central banks. Now this data may include CRAR, this may include the different risk exposures, etc. Now implementation, so adoption in India has already been done. Okay? Now moving ahead, we have the Basel norms 3. But for that we will be having, but Basel norms 3, we will be having separate discussion on Basel norms 3, because that is the most important norms that we have at this present time, at this present point of time. Okay? India is already implemented the Basel norms 3, but that is extremely important, and even I would say it is the most important norms in all of these previous three norms. Basel norm 3 is the most important norms of all time. We will have a separate lecture, we will have a separate live session for the Basel norms 3 that we will be having tomorrow at 12 p.m. So if you want to have a detailed knowledge, I think you must want it to be have a detailed knowledge of Basel norms 3. So for that we have a live session tomorrow at 12 p.m. So do join to know each and every nuances that is important from your examination point of view of Basel norms 3. And if you want to download this PDF, this data for free of cost, you can download our app, that is Ecoholics app, from the Google Play Store, and over there you will get these kind of free data, whatever we are presenting to you, these kind of free, extremely important and quality data for free of cost. You can download it from there. And even if you have any kind of query, in regards to the paid data or paid courses that we provide, you can contact on this number. You can take a screenshot of this number, and then whatever kind of query you might be having in regards to us, all of your queries will get resolved as soon as possible. So thank you so much for joining today's live session, and I hope that you people must have got extremely valuable insight from these classes. And now we will meet tomorrow at 12 p.m. noon, dealing with the most important topic, that is Basel Norms 3. So stay tuned. Do subscribe to our channel and turn on your notification bell so that you can have a notification as soon as we go live with these interesting live sessions. Thank you so much for joining today's live session. And now let's meet tomorrow. Till then, have a great day ahead. Bye.